Hi guys, welcome to CrypoFros channel. My name is Jeremy and I will be your host for this part of the channel. In this section of the channel, we'll be talking about chart analysis and market analysis. So today I'm going to be teaching you how to become profitable investing in the cryptocurrency market. The goal here is to help you wrap your head around how the market moves and to be able to leverage on this knowledge to become profitable as fast as possible, to be honest, investing in this market. So in order to give you more clarity and a very intuitive approach to the crypto market and how to trade on chart analysis or simply just long-term investing, I will keep things very simple. In this channel, we'll be mostly focusing on smart money concept, which is widely popular amongst trading firms and institutions, with references to retail trading chart patterns. So please, guys, if any one of you feels unfamiliar with any of those terms, leave a comment below and I will be making a video about it to explain any terms or anything you guys want to know about it a little further. Or much further. So before we get started, I'm going to give you guys a little breakdown on a set of technical words that are going to be essential in your understanding of what I'm going to be teaching you here. So for starters, what is a market structure? So properly speaking, this is the support and resistance area in the market that determines a range, basically. So what is the market structure? This is the support and resistance area in the market determined by the swing highs and swing lows in the market, which in essence, both buying and selling pressure are keeping the price in a given asset within a range until it breaks out of the range. So, okay, to illustrate what I just said, what I just told you guys, let's draw up some little squares on this chart here. So we're going to grab Matic USD pair. So let's determine the range here. So for example, we're going to be going very wide. So these could be considered a range. We got a swing high, a swing low, another swing low, another swing high, grabbing liquidity because it slightly breaks out and it quickly drops back inside the range. So this could be considered the range within which the price action is going to fluctuate for a given period of time before it breaks out of it, whether that be to the upside or to the downside, right? So this is the range. If we wanted to see something different, so basically we got different time frames. So say we go down to a 1 hour time frame and then find another range, all right? Let's see, for example, here. We got another range right here. So we got a swing low. I think we could even extend it like that. Yeah, up a little bit here too. So the price drops down into what is going to become a new range. So this is the top of the range, dropping all the way down to the swing low here, the bottom of the range. Throwing the price back up, not quite touching the top of the range, fluctuating some more, touching it again, and breaking out of it to the upside, all right? So this range is also called a structure, all right? That's what we are going to be referring to as a market structure. So the market structure has different names for it as well. It's also called support and resistance. Also, what is market structure? Basically, the market structure, this is the support and resistance. As I was saying, this is the range. Also, you guys got to know that the top of the range is also referred to as a resistance level. So now there's another term that is very common in the trading area, in the trading industry, which is the market trends. Market trend. What is a trend? Well, in the market, in the cryptocurrency and financial industry, sorry, a trend refers to when the market goes up or down. All right, so it's going to be either an uptrend or a downtrend. So essentially, an uptrend refers to as the market, the price fluctuation, the price action to make higher highs and higher lows. This is also said to be a bullish trend. All right. So then, when the trend goes down, it's going to be considered a bearish trend, and so therefore it puts in lower highs and lower lows. So now let's talk about the break of structure. The break of structure or break of the range as well. So essentially, it occurs when the market shifts direction. It leaves area of imbalances, and so therefore, area of imbalances are essentially open orders that aren't being filled in, that are open orders from the institutional companies or trading firms that aren't being fulfilled. So a break of structure is basically when the price action decides to leave a given range, all right? So it's going to break the structure that determines this range. So here we see that the structure, there's multiple structure, but this is a story for another day, all right? So I would say that the top of the square here could be considered a structure. So the break of structure occurs right here at the corner. So let's get rid of this box right now because it's a little bit all over the place and obstructing the way and the view. So we see a break of structure occurring right there, and then the price consolidating, retesting this support, this formerly resistance level becoming support level, and then heading higher from there. Later on, we're gonna learn to recognize which area within this structure we need to pay attention to, or which areas we need to pay attention to in order to make our trades, so enter the market or exit the markets. So the next set of words is going to determine the areas sponsoring the impulse move, breaking the structure, all right? So it is referred to as POI, sell before buy, buy before sell, otherwise called institutional candles. These are the market manipulation candles, making you believe it is going to keep going or give it in a given direction, when in fact it's going the opposite way and proceeds to grab liquidity in that area. So these areas are basically the areas we are interested in. We need to keep our eyes on. So for example, when we take the chart we've been looking at so far, which areas or which points in the market have been sponsoring a move breaking a structure here? Which are the POIs? So say, for example, this upper line here would be the top of the structure. It got broken at this level here. So the last sell before buy candlestick sponsoring the move up that broke this structure, we could say would be this one right here. But before that, this little structure here, this little area got broken as well by a sell before buy right there. So essentially, these two levels, these two areas here, are the areas we want to map out and keep our eyes on at all time, because it has a very high probability to see the price in the future, long-term future, or close, or long or short-term future, to retest to retest those areas before going back higher from there. All right. So let's scroll through and see what the price action does from there. Whew, look at that. Let's get rid of the volume. Damn, man. That's some pretty hard hit. So sure enough, he hits it and bounces off from it. So you could have been able to make a nice little profit here. However, from there, it kept going lower. So these areas are definitely areas of supply and demand. So in this instance, this would have been an area of demand because people are supplying, or these people are essentially buying the market, buying the Matic cryptocurrency coin here, pushing the price higher. So let's see. Let's just study the chart a little bit more and see what it does. So if you were a long-term investor and you'd have bought here, you can see that the price would have gone slightly lower. So you'd have been in the red for a little bit. Essentially, to be more precise and accurate with you would have been in the red from here to here for 2 days and 11 hours. After which you would have flipped back up to another PY that would have been able to recognize that essentially broke a structure, but this time to the downside. So this little PY right there, see? The buy before sell candle. That broke the structure. The structure here being this area right there. All right. So this PY here, this green candle made you believe that. Let me extend that a little bit because, okay. So this little green candle here made you believe that the price of the stock of the currency would head higher from there. That was the bottom. However, it was not. It broke down from there, down to our lower PYs, where if you'd bought from there, from those, you'd have waited long enough. You would have pre-ordered your entries here and here, and pre-ordered an exit here. You'd have made a nice little profitable trade from there to there, because look, he went straight away and hit it. So yeah, ultimately that is what the POI is. So yes, guys, that'll be all for today. That was a nice little introduction, in my opinion. So that's pretty much what we'll be doing here, just studying charts and determining where are the best entry and exit points in the market for like safe, I don't want to say guaranteed gains, but safe gains and safe investment that have high return and high probability of success. All right. So I hope to see you guys soon. I hope you got some value out of this video. So if you did, do not forget to like, subscribe, and turn on the notification bell. And if you feel like this video could be helpful to anyone around you and your close circle of friends or family, do not hesitate to just forward them the video and ask for their opinion as well. All right, very much appreciated, guys. Smash this market, make money, and be safe.